I'm Adam Shepherd from Lending Choice, and we're going to talk about the CCCFA and the recent changes that came out on the 1st of December. So probably the biggest one, what does CCCFA stand for? It's the Credit Contracts and Consumer Finance Act. The big changes that came out on the 1st of December is around protecting borrowers when they go ahead and apply for a personal loan, a mortgage, a credit card, an overdraft, or even short-term finance. So how do the new CCCFA changes affect you applying for a mortgage? It's going to be a more detailed process applying through the banks. The banks are required to go ahead and understand your affordability, so they're going to ask more questions around your expenses, and we need to be able to provide them with details of those costs. For example, your insurances. If we're unable to evidence them through a bank statement, we need to go ahead and get a policy schedule so they confirm exactly what you're paying when it comes to your home contents and different insurances. They're also more thorough when it comes to your account conduct, so no unarranged overdrafts, no missed payments. This could potentially affect your ability to be able to be approved for a mortgage. So you're probably thinking, why were the CCCFA changes implemented? They were put in place to ensure that lenders protect their borrowers and go ahead and accurately capture their expenses. So there's a lot more detail that's being put in to actually go ahead and understand all the expenses borrowers have when it comes to their rates, their property insurance, their daily expenses around healthcare, medical, but there's also a further focus as well around what their debts are, accurately capturing the remaining terms that they have on that, and then as people's incomes to make sure that they're going to have that on an ongoing nature, meaning people that are going to be able to afford their mortgage over the life of the term of the loan. So with the recent CCCFA changes, the team and I at Lending Choice have worked really closely with our borrowers to ensure that they're able to go ahead and settle on the loans that they've already been pre-approved for. There's been some changes to the Act which means that those approvals actually lapse come the 1st of June. So we're working closely with the developers to find out what their estimated completion timeframes are, and then getting out in front of it with our borrowers and having a conversation with them to put their mind at ease, to see whether or not we need to go ahead and plan 3 months out with their expenses, make sure that they're in keeping with what their long-term budget is, or their post-realistic drawdown budget, as it's been termed. And then that way that we know that come time that they go to settle on their property, they're going to be able to go ahead and get into what's going to be their first home, their new home, or as a property investor to go ahead and sort of start that financial freedom journey that they've put themselves on by going ahead and signing up for a new build.